Hello. Is there pain incoming? And for who? Welcome to Landy's Crypto Corner. Today is February 22nd, 2023. And as always, we're going to take a look at Bitcoin spot price action to start with here on the daily. We're going to see kind of the picture that Bitcoin is beginning to paint here and come up with some possible scenarios for in this case, what could become downside or a retracement in this case, and what might invalidate that and where we might see Bitcoin back around its highs and possibly higher. So when looking at spot price action here on the Bollinger Bands, you can see that yesterday's candle here, this guy right here, did wick down almost to the area where the low close open is down here from the 16th and the 17th of February, and then did get bought back up pretty aggressively on lower term timeframes, but failed to regain any of the close open structure up here and was just kind of in and around the wicks. Did close below the first standard deviation. So this would be, the strong half of the bull band still. In this case, the first standard deviation is continuing to rise, and we are trading right around it at this particular moment in the start of today's session. So the first standard deviation is 24,391. That will continue to rise as long as Bitcoin is above the 20 simple here. We will start to see some contraction, of course, if we close a daily underneath the first standard deviation again. And we'll take a look at volatility and other things like that. I actually got to bring my notes up here. So if that can be regained on a daily close there, that 24,400, let's call it, then I would expect the momentum pivot that you see here on the chart. This is just a Stoke running a 6-3, 14 period length. And it is, right around that 24,640 to 645, depending on your chart. It might even be 650. So if you don't have access to a Stoke that has the actual pivot at which it would turn, up or down, you can use this as a metric. It'll be good until tomorrow's closure, or today's closure, I should say. Sorry. In this case, if we can get above there, I would expect another run to the highs around where the second standard deviation is to the upside, around that 25,500. Now, of course, that would dramatically change some of the picture that we're going to be looking at, which is, to be honest, quite bearish with all of these swing fails up here and a confirmed swing fail setup here. So what the candle structure here is telling us is that basically, let's go ahead and throw on support and resistance. We can just do that right now. Where we have, seen price trade and then get rejected from would be the actual highs of the range over here, that 25,200 to 25,214 area. And then we've even, we've tested above that, that particular high that was put in August of last year. We've traded above it again, and even swung on Thursday. Tuesday, sorry, not Thursday. We even swung the local range highs, and we have subsequently come back down in this Wednesday candle and closed below the close open here from the 19th into the 20th, which was the Sunday into Monday candle, thus confirming this as a swing fail pattern. Now, ideally, you want to see closures below the wicks. So in a perfect trading setup, which we don't quite have just yet here, but a daily closure below that 24,153, whereas yesterday's candle closed at 24,184. So about $20, about $20 to $30 above there, depending on your exchange, of course. It does on a closing basis confirm the swing fail pattern as valid. So that would be a swing of the upside here, thus putting us into a downward trend on those lower term time frames and giving us a target of the current lows on an open and close basis around 23,500. Now, if 23,500 is dropped, I would expect to test the wick lows here at around 23,350 or so, 340, 350 area. To be more general, you can target about that 23,280. Just call it 23.3 at that point. It's the 20 simple on the daily. So when looking at this, that swing fail pattern is giving us the bias initially here on the daily that we will test around the lower $23,000 area. And of course, below there, we are probably going to test into the 22s and eventually stair step our way down. If not just in one shot, we would have to see how that goes intraday. If it were to continue to fall past this area here, and to be quite honest, below 23.5, I think 23,000 to 23.3 is kind of the main target. See how things go there. I'm also going to show you another key area here. This is a trend line that I have snapped on here that I'm actually going to change to a horizontal, just so we have the price there at 23,824, which we wicked through. And what you can see is this was resistance. This was pretty heavy resistance back here in the prior range before coming down to around that 21.5, low $21,000 area, getting that nice bounce on up here. So this area was resistance, 1, 2, 3, 4 candles in, a span of 5 days. So seeing support there initially, not unexpected at all. So now it's a matter of, do we get follow through and, we start trading below yesterday's wick low or even today's open. Obviously, that's going to give us the bias that we're going to go down and test those areas in basically below $24,000 is kind of where I'd be looking for those areas to start getting tested to the downside, as we did open today's candle at 24,184. So start trading lower than that. Probably going to go and test that yellow line there from the range highs, that rejective area that eventually was, very bullishly pushed through there on the bid side. So in this case, below there, I'm looking for, 23,500. Below there, 23 to 23.3 area initially. That's also then going to fire off a bunch of other momentum-based signals that are going to give us the bias that things are probably going to test lower around the mid to low $22,000 area, around the first standard downside deviation. Start closing below there. We've got a pretty decent low that's sitting right on top of a pretty decent high over here from the, we're talking basically 1, 2, 3 drives up. So it was the first drive. And that is going to give us a bias that we're going to test around below the first standard deviation to the downside, around the 21, 350 to 21,600 area. Gets bought back above there, makes it above the first standard deviation. Great. Then we can reevaluate, see if there's possibilities for, lower highs on the daily, in which case would start to paint a bit of a distributive pattern. And if it does just kind of close below the second standard deviation there at $21,000, we're looking at around $20,000, coming in a little bit lower than this low area over here. The mid $20,000 area to upper $20,000 area, 20,500 to 800 is going to be a big area. We've got 21.2 on the close open over here. We can mark that area as well. And then we've got a little bit of a zone down here as well at 20,675 with the low coming in at 20,370. Below $20,000, I think this, retraces all the way to 18 to 18.5 initially, with some pit stops probably around the mid $19,000 and $19,000 specifically that we could evaluate if and when that were to happen. Now, as I said, to the upside here, anything back above the first standard deviation going to start giving us the bias that things will retest the highs. Got 24,850 or so on the highs. Above there, we're going to test the wick highs, probably go test around that 25.5 second standard deviation to the upside. If we were to see things start closing above there, we can substantially raise those targets into the 26,000 to 26,500 area around the third standard deviation to the upside, with possibilities for more on that, kind of up to that 28. If we were to see continuation, 28,000, then 28 to $30,000, and so on and so forth. As I've always said, take it in $2,000 chunks when you're looking at the daily, and pretty much can't go wrong. That's how we nailed that between $15,000 to $16,000 on the pretty major low down here, with in this case coming in at 15,512. So the median of what we were calling for initially, and that's kind of the way I'd be looking at this as well. Now, let's get rid of some of the support and resistance here, as I think that's fairly self-explanatory. You can look at highs and lows. We talked about this stuff on the swing chart yesterday as well. So if you didn't watch that video, I would go and kind of brush up on it. You do want to know the swing chart, which is just highs and lows, which is your support and resistance areas. But the more important ones are going to be kind of right there staring us in the face, right? As I said yesterday, the big one, if we do see things break down below us here, and I guess I can just really quickly go over this, but let's get rid of Bollinger Bands. Let's go ahead and turn on we got the swing chart here. So we can see on the weekly with the swing chart that we have the really important area to look out for. I mean, we've got that 21.5. That's the really big area. Below there, I do think we test, $20,000 if things can hold up. Great. But the momentum would probably take us below there, to be quite honest. When looking at the swing chart, the next big area is, kind of the main area that I think needs to hold up is around that 18.5. So in this case, I've got my cursor around 18,400. You can see there's 3 swing lows in here, and in around that area, obviously there's variance, more like 18.3 to 18.6. Take the median of that, and you got 18.5. And in this case, we've got the high there at that 18,400 or so. And that's really, that's going to be the biggest area to be on the lookout for, because if things didn't bounce very aggressively from there, not just on the daily time frame, but follow through on the weekly for another, for a higher low it would be a lower low if things got down there. But on a more macro basis, having a low that is higher than these lows is going to be good, because it's most likely going to come on divergence. In this case, we can see if we do put in a high here, we've got the potential for bearish divergence on the weekly. We've already seen the other drive play out, so we'd be looking at a fresh drive of hidden bearish divergence on the weekly. When looking at the daily in this case, we can see that we've got a ton of regular bearish divergence that is built up here. You can see that Bitcoin's RSI kind of back testing the breakdown below the bullish control zone. And the bullish control zone right now is 24,617. So that is an important area that we just spoke about earlier, where the momentum pivot is for the daily, right around there. We can see that the daily momentum pivot is 24,640 to 650. So the the bullish control zone obviously is not going to directly bounce off of that. Plus, bullish control zone on this particular indicator is set at 62, not 60. So that would be, basically a retest of the momentum pivot on the daily. If we do see things head on up during this daily candle, is going to be very important. If it can regain it, start looking, back to that $25,000 area and see how things go from there. But that's going to be it for the basics there. I think it's very clear that we can see that Bitcoin is kind of teetering on the edge of possible breakdown, but it's not in the danger zone yet. And I really do think the danger zone is going to be below 23,500. That's front runnable, I think, on lower term timeframes as well. We'll get into that in just a moment. But we're going to have to look and see what some of these other momentum pivots are. Oh, and in this case, I do want to show volatility, and this is going to be using the Bollinger Band width percentile tool by Caretaker. If you guys want to know which indicators I'm using a mix of some paid indicators from communities and creators that I really think do a fantastic job with indicators. And you'll see that there's some Crown's Crypto Cave influence in some of this because, well, he was one of the best bear market guys to hang out with when he was streaming pretty regularly back in 18-19 time frame. And then developers that have worked with him, Caretaker in particular, KVBD, who created the Stoke, and a handful of others have created some of what I believe are the best indicators on the market for my style of trading, which I gravitated towards enjoying. Well, I think he goes by Eric Crown Crypto now, but he has a very similar trading style to myself. So naturally, I gravitated towards that. I don't use the EMAs for trading as much as I know he does, but I'm more of a Bollinger Band person, so this kind of fit right in there. Caretaker's got a bunch of free tools. The BBWP is free. You can just look it up in your indicators tab here, and you can put that on your chart. Bollinger Bands, obviously, I can show you the setup for that. They're just Bollinger Bands. They're built-in trading view. I just changed the standard deviations and added 3 of them to the chart. The KVDB Stoke indicator down here is a paid indicator. So, and that's just nice to know what the momentum pivots are for where Stoke would turn. And in this case, I'm not affiliated with Crown in any way. I don't make money off of any of this. I'm just a fan of the community that he built there, as I'm a member of it, and the people who have created indicators sell through his website, and they've done what I believe is a fantastic job. But you don't need to know the momentum pivot to see if Stoke is up or down, and then you can use a free indicator like BBWP for volatility. Here you can see the main reason that I'm bringing up volatility here is that volatility has begun to cool down. Obviously, we've slowed down volatility. Many days of sideways here, trading within a general range on the highs here. So it's natural that BBWP would start to cool down. That equates to contraction of the Bollinger Bands. In this case, it's not because the Bollinger Bands are contracting, they're still expanding. But we see that price is reverting back to the mean, or the 20 simple in this case. So you're seeing that BBWP is slowing down. When we do see the moving average and BBWP pointed down, that would give us a bias that a mean reversion play is a deeper mean reversion play is likely in play to around the 20 simple at first, and then we see where things go from there. Realistically, this is going to bounce around, and this most likely would cool all the way down, even if price is sitting on the first standard deviation Bollinger Band to the downside. So first standard deviation Bollinger Band at 22,168. we would see a little bit of re-expansion, but in and around the 20, we would start to see this cool down. Bollinger Bands start to contract, and then we determine direction from there. The way I like to do it is, break above the first standard deviation and a continuous move. Then we're going to go up, just like I was explaining earlier. And then first standard deviation to the downside would start to reinitiate expansion to the downside as we closed in on the second standard deviation. If you close outside of it, that begins the trending move, typically trending in between the second and third standard deviation, using the first standard deviations as support to around the 20 simple as support. So right now, to be quite honest with you, we are in the strong half of the Bollinger Bands, or the upper half, which is more bullish than bearish. So I can't call for a total breakdown from here. Bitcoin has very clear invalidation of any kind of an uptrend here. Anything below that 20 simple, 23.3 area, I think that this particular move is going to be over, and we are starting to look back to the lows. Now, whether those lows come in around the mid to high 22s or on the bottom side of this range, this prior range, or the actual previous low that was put in, which is also right around the swing high up here, we have the swing low. So I would expect a decent reaction out of both of these levels, whether it's the, and remember, this is only if the 20 simple is lost around 23.3, that I'd be looking around the mid $22,000 areas to the upper $22,000 areas, 22.5 to 22.8. Then start looking around the mid to upper $21,000 areas, below 21.5, or in this case, assuredly below the second standard deviation at $21,000. I think we initiate expansion to the $20,000 area. We see how things go, but it would definitely have me targeting, the mid 18,000s. So that's going to be my take on Bitcoin right now. Let's look at some higher term timeframes. We do have a 2-day closing today. You can see that we are still above the first standard deviation to the upside. We are starting to see BBWP contract because the Bollinger Bands are contracting. We have seen a little bit of just sideways and up after hitting the 20 simple here. So tagging the 20 simple, using that as support, finding the second standard deviation to the upside here on the 2-day as resistance. That's 25,176. Again, above the highs, probably going to go up and test around where? Probably around 26 to 26 and a half initially, and then we go from there, see what the next couple of dailies, 2 days closures look like. In this case, you can see back below $24,080. That's the first standard deviation to the downside. So this would be, aligning with some of the prior analysis that I just went through. But you can see that the first standard deviation to the downside is sitting at $24,080. So trading below there is going to target, guess what? $23,000 below there. Second standard deviation coming in at the lows, 21.8, 21.5 to 21.8 area, which is the lows here of basically the open and close. It's the highs of the open close of the low to the wick lows there. Of course, anything below the first standard deviation to the downside, I would expect a bounce from the 2-day at around that 20,800 area. In this case, 20,784, 785, depending on where price is trading here, because it is live. When looking at momentum on the 2-day, it is currently pointed up. 22,820 is the number to maintain for today's closure of the 2-day chart. That, of course, is going to work its way up. It's at 22.8. I would expect it to get fairly close to price action on the wick lows here at around 23 to 23.3. Go figure. I am estimating that, but I have a lot of experience estimating these numbers. And I would say that that's probably a fair bet is for this new momentum pivot once this 2-day closes, provided it closes above 22,800 here, then I would expect it to be around 23 to 23.3, maybe even a bit higher, maybe even pushing that 23.5 area. Let's go ahead and look at the 3 days. We are also closing the 3-day, and you can see below $24,000 in the 3-day. That gets below the first standard deviation. with targets being the lows to around the 20 simple. That's coming in at 21,153 in this case. Went over that one yesterday. We've got the 5-day coming up, where that's in the mid $22,000 area. Not really relevant unless we start violating below the $23,000 area. Again, back above the upper 25s in this case for the 5-day, 25,735, and we would see a nice run to around $28,000. But I'd take it from the daily and 2-day first to give a better idea of if we would even see continuation or possibly another, intro 5-day candle spike up and then right back down. In this case, we could, still within striking distance here at that upper $25,000 areas on the 5-day chart in this case. So we can see that the 5-day momentum trying to curl up on any closures above 24,200, currently estimated to be above there as price is trading above there, but we still have a bit of time on that one. So it's down to the daily, 2-day, and 3-day to see what's going to happen leading into that 5-day. So once we close this candle, we'll be in the closing day of the 5-day candle. So once we close this current Thursday candle, Friday, it's going to be the 5-day candle. So, all right. What else did I have for you? One last thing here on Bitcoin spot price that I wanted to go over, and that is session volume. It is on the chart. It's just down below. So session volume on the daily. If you haven't seen this before, the blue lines are value area highs and lows, and the red lines are the point of control for each daily candle. So let's bump down to a 4-hour chart, and we can just go to an hourly chart. So the way that this works, pretty simple. It's going to line up with many of the areas that I just talked about. You can see these blocks of these areas that are blocked out are going to be the dailies. This is yesterday's candle. We can see Tuesday's candle and Monday's candle. And one of the things that I want to point out here is we typically tag these areas. So the point of control obviously being the highest volume price traded. So you can see today's developing. We can see that just below us here at 24,453 is the highest volume of the day that happened at that price. So if that area is lost, we're going to more than likely go and test the open of today, which was the 24,230 value area low. And just below there is yesterday's value area high. So if we do see price come back this way, there's an order block candle right there, by the way, here on the hourly. Doesn't mean too much. There's a couple order block candles here, but just something of note because it is sitting above yesterday's value area high in between these two value areas. So if you take out the low, we close and we hold the high, probably good for a little bounce, even if it's a lower term time frame. If we go up and we take out today's recently developed value area high, we can see that that not yesterday, but Tuesday's point of control has not been retested since created. So I would expect that to be a big area of resistance. And what do you know? It's coming in right at the daily momentum pivot at that 24,600 area, 24,685 in this case. And just above that, we have the value area high of Tuesday's candle as well at that 24,800 area. Above there, you can see that we have tested and taken all of the points of control and all of the value area highs and lows as we were trading in a sideways range, kind of tagging each area and bouncing in between them. So if we were to take out 24,850 or so, or 45 then I would expect to run the highs and higher, and see where, things kind of land there if it does break out and or get a violent rejection like it got back here on Tuesday. If we do start seeing things run down, yesterday's point of control is going to be that 23,800. Value area low is going to be 23,663. And we did test Thursday the 16th value area low and bounced very cleanly from it. So I would say if you're going to be looking at this as like, I want to front run like 23.5. He said 23.5 a lot below there. Test that 23.3 and 23,000 in that order. If there's no bounces, probably going to get continuation to the downside. I'm sure that heading that way, you're going to see bounces in the lower term timeframes. But in this case, that area is lost. Look at where the next area is, 22,800. That is the biggest point of control. There's nothing up here that hasn't already been retested, right? So there's a big old gap until you get to 22.8. So below 23,000, I think that we start running that area all the way down to the value area low of this run up that occurred here on this candle, which was the breakout candle from that pretty major low that we put in here around that mid $21,000 area. We had this nice bullish engulfing candle, but left behind the POC and the value area low there at 22.2 to 22.8. And of course, you can see that all of this area down to $20,000 has been untested. So that is to say, you can use these as confirmation if price moves through them and maintains them as support for whatever time frame you're using. Then you can start looking at, in this case, to the upside, it would be support. So you'd be looking for further upside, and wherever things reject, that's where you exit. To the downside, we start losing those supports and finding them as resistance. We're going to head down. So that's going to be my final look at Bitcoin spot price action. I'm going to bump out to CME very quickly just to see what kind of major timeframes are closing outside of course, the daily. And we'll take a look at momentum real quick, and then I'll let you go here. Obviously, we swung around, lost this area of what is resistance and short-term support, but we have not maintained a very good closure outside of the doji on Tuesday, which is just an indecision candle. Quite honestly, we trade above that doji at 23,355. We're probably going to leg up pretty far, mid 26s to around that $27,000 area. I don't think we're getting too much of a different look on 26. I would say probably 26 from where this is. We did lose the first standard deviation. We did gap up, though, above it here on the daily to this 24,645 here on CME. So that it's going to be different numbers here, but 23,400 is the 20 simple. Looking at below there, run to 22.5 or so. And then it's the lows, which would start to look a little dangerous because we would be in and around that 21.5. Of course, we lose that. We're getting expansion to the downside, right? So very, very similar look on CME here. Of course, we are expanding still to the upside here. We're not seeing the same look on volatility as CME doesn't trade over the weekends and pauses for an hour each day. So in this case, the momentum pivot is going to be 24,262. So if there is a daily close below there, we will see an initial cross down on Stoke, which obviously we start closing below there. We're back inside. We're already seeing price trade below today's open. In that case, today opened at 24,320 for CME. So that momentum pivot would imply that we're trading back below the open of today, which would be below the first standard deviation, thus giving us the bias of the mid $23,000 to low $23,000 area around that 20 simple. The 2 day is going to be closing with today's daily candle. 24,200 also going to be the first standard deviation to the downside here on CME. And the momentum pivot is, it's still pointed up here, but 24,393, which trading a little bit above there right now, would, obviously give us a bias down to the 20 simple on the 2-day. Is going to be the wick lows at 21,325 for CME of the last major low that we just put in, that nice higher low. And we closing a 3-day. We are closing a 3-day. You can see $23,000. Big area on spot price action. Big area on the 3-day chart for CME. And we would see targets down to that 20 simple again. 24,916 on the 3-day. So basically, got to beat 24,900 to $25,000 to the upside by close today. And we can see that just under $20,000 is the 20 simple here. That will take up most likely right into this gap here. So around that $20,000 area is very enticing for gap buyers as well. So price being pushed down there, I would expect a nice bounce around there. Obviously, it's the 20 simple on a longer term time frame as it is. So would want to see it as support as we are coming off the strong half of the Bollinger Bands. The 5-day just closed, and we are seeing the 5-day pivot is going to be 25,100 to maintain upside. It is in a very critical area. Looking for continuation only if we can get the momentum pivot back above there in the next 5-day closure, which isn't going to happen until next week, mid next week. But above 25,380, we would see that begin to trend back to the upside here. BWP for the Bollinger Bands, obviously we're above the first standard deviation, so we are still seeing expansion to the upside here as we kind of have been wicking into the second standard deviation after 2 solid closures outside of it. So that might be putting a cap on price action, but if we did see some kind of massive spike up, I do think it's a little tired for that, and I am favoring the downside personally, at least on some of the daily 2-day time frame. Me personally, the chart is not there yet. I just have a personal bias, so don't take that as that's going to happen. But if we were to see something crazy, I do think that we're kind of capped at around that $28,000 area to the upside, maybe throwing wicks a little bit higher. But if that were going to happen in the next, 6 days and 18 hours, I do think it'd be a pretty darn strong rejection, to be quite honest. But the weekly is also painting the same exact area. So again, below 22.5 in the weekly, that gives us the bias about 19.5 here on CME coming into the Friday closure. Obviously, that's something that we'll address tomorrow as well. But the 20 simple on the weekly is coming in right at that, right at the gap on CME. So again, if things do start to break down below 23.5 on spot, we're probably going to see things run that 23, and then we evaluate from there. That's going to do it for me today. I hope you have had a wonderful day, and I hope you have a good morning, a good afternoon, and a good evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all of that said, I have no idea how much time I took this time. I am trying to cut this down, but I got a lot of information that I'm trying to get out all at once. I know that a lot of it is repetitious, but I will make a concerted effort to make these a little bit shorter and a little bit more watchable as well. But you have a wonderful one, and I will talk to you guys tomorrow, as always. With all of that being said, Landy out.